We're going to stick with the auto space, really, I guess, and talk about Tesla. Now, shares today hitting an all-time high. Right now, the stock is trading just above $390 a share. Now, this comes on the heels of Bloomberg reporting that the electric automaker may cut the price of its Model 3 in China. Melody Hahm is with me. And Melody, the big question here is, why are they doing this? We know that Tesla has been struggling maybe to gain some traction in China, or enough as they were hoping. Are they thinking that this will boost sales?
Yeah, in some ways, Elon Musk was kind of looking at the crystal ball, anticipating some more context here. When you think about the Chinese subsidies that the government was offering to consumers, they actually rolled those back in June of this year. And I think Elon Musk, as he was building out the Shanghainese Gigafactory, which was first announced last year, recognized that, hey, perhaps the demand is not there without those incentives for consumers. So ultimately, in order to avoid tariffs, of course, we know the tit-for-tat tariff war has certainly impacted not only real economic dollars, but also consumer sentiment about potential imports there. And by really localizing the production of the Chinese Tesla, they could lower the cost by about $10,000 US. Right now, the starting price anticipated would be $50,800. And according to Bloomberg and the sources that the reporter spoke to there, it would end up being reduced by about $10,000 US. That is essentially what the subsidies of the Chinese government were providing anyway. But guess who has to foot the bill? Now it's Tesla. Now it's automakers. And the anticipation is ultimately that NIO and the likes of other competitors in China would then have to follow suit, right, in order to really be competitive in that market.
Yeah, Amelia, I wanted to ask you about the competitors, because even though Tesla will be doing this, will reportedly be cutting the price by up to 20% of what it currently is, they still face the challenge that, hey, they're second or third or fourth in line compared to some of the Chinese companies that already have, I guess, a lot of success over there.
Yeah, especially when you think about the Beijing mandate. According to several documents that I actually looked at as well, the Chinese government really wants 1 out of 4 cars to be purchased, by the year 2025 to be an electric vehicle. But I just kind of liken it to even think about the payment space, right? The Chinese consumer almost skipped over credit cards and they went straight to mobile pay. They went from cash to mobile pay. It kind of is like thinking about the auto sector as well. EVs, they adopted EVs way earlier than we did. So the question here is perhaps the market is too mature for there to be new entrants to a very aggressive degree. Of course, we know Elon Musk loves a steep challenge. So in his case, he's saying, this is something that I can tackle. I don't know if that $10,000 reduction, or 20%, as you say, would end up really incentivizing. But we do know the Muskian empire and the cult following definitely exists in China. So I'm sure it will have a decent amount of impact when we think about the price cut.
Yeah, you're right, Melody. He doesn't back down from a challenge. He doesn't back down from setting some of these lofty goals. So we'll see what he has to say about the latest in China probably pretty soon. All right, Melody Hahm, thank you.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.